Good old mining firms, and what better one to start off with than BHP, formerly known as Billiton. They are a multinational Australian mining company that primarily deal in iron ore, metallurgical coal, which is used for making coke, which is then used for making the resource that keeps the world turning, steel. They also mine quite a few other resources that we'll see later on, mainly metals. So let's dive right into them. Ticker symbol BHP. Currently trading at £25.62 and a market cap of 132 billion. That's a lot of change. We can see here that over the year they've went up about 16%. Now, the thing about mining stocks, and mainly the likes of BHP and Rio, because I know they primarily deal in the likes of copper. That was the other metal I was thinking of. Their share price follows very closely to the commodity prices of both iron ore and copper, because obviously that is one of their main resources that they mine. So the price, if you ever actually hold the chart side by side, it's really interesting that you can see at an all-time peak of April 2022 was when iron ore and copper were also at a near all-time high back then. So that's quite an interesting dynamic. They're obviously a cyclical industry. As commodity prices rise, share prices rise, dividends also rise, and boy, they are big dividend payers. I actually think they're over 10% at the moment in yield. Now, they did just release back in September their largest dividend payout ever. So, bear that in mind. It is projected that a lot of these commodity prices, especially with China opening their economy into 2023 from the pandemic, a lot of them are supposed to decline from their all-time high. Not everything can remain at such a high point, so that's something to bear in mind. But enough doom and gloom, let's jump into them. Their dividend is 5 out of 6. Their health, 5 out of 6. Past performance, 6 out of 6, which is quite rare to see. Their valuation scores them a 2 out of 6, and future performance, 0. That's because, as I said, in the next 3 years, it's going to get a little turbulent for all the mining firms. Not to necessarily say they'd be the worst investment imaginable. For me, I own shares in Rio, and I'll be doing a video comparing BHP to Rio. Rio only slightly edged out BHP, in my opinion. But let's concentrate on BHP for now. Price to earnings ratio 7.9 is below the UK market, and earnings grew 75% over the last year. We can see forecasts are that earnings are meant to decline 16% per year for the next 3 years, and their dividend track record's unstable. A mining firm with an unstable dividend track record? Say it ain't so. Let's go on down. Now, their competitors is a perfect list. We've got Rio, Glencore, Anglo America, and Antofagasta. Perfect competitors. I'd say mainly Rio and Glencore, but the other two are worth a mention. And we can see here in the charts that there's been plenty of things going on: executive board changes, special calls, earnings updates, annual general meeting, and private placement. What's that there? Private placement? Brixton Metals Corporation announced it has received in funding from BHP. Oh, okay. That's an interesting wee thing I haven't seen before. There's a lot of news, a high number of new directors. We can also see that they are considered 20% undervalued as of October 24. We'll see if that still holds up. Right. In terms of price volatility, they are considered on the lower side to the industry at only 4.4% weekly. They employ over 45,000 employees. Their CEO, Mike Henry, has been with the company an awfully long time. We'll be seeing him later on in the video. And it was founded in 1851. As I said, they are a resource company operating internationally, primarily in the likes of Australia, South America, and they have offices worldwide. I also think they have a mine in Canada, if I'm not mistaken, as well. They engage in the mining of copper, silver, zinc, uranium, gold, iron ore, and coal for both energy and steel production. They actually are a really cool aspect. They also provide towing, freight, marketing, trading, and a lot of other services. They're a really top-down company, and they've integrated an awful lot. Like in the likes of even freight, they own a lot of the train cars to get their resources from mines in Australia to the docks where they're shipped off. So that's That's a good top-down integration. Earnings 16.8 billion with a revenue of 54 billion, pay ratio of 7.9. We'll see how that compares to other competitors later on. Now, a very important date is February 20th, 2023 to see their next earnings call. Currently, it stands at a gross profit margin of 85% and a net profit margin of 30%. Now, whilst they did make $20 billion in earnings and they did pay an awful lot of that out in a dividend, their payout ratio is 81%. That is quite high, although very common for mining firms. Ratio of 10.3 at the moment. Well, yield. Valuation, they scored 2 out of 6 in this one, so it'll be interesting to see. Against competitors. So Antofagasta is just way up there at 20.7 times. We'll be doing a video on them soon. Anglo America is slightly lower, as is Rio and Glencore. So out of the 4 main ones here, BHP sits among the highest in pay ratio. We can see that they're considered overvalued of 12.6%. Current price £25, fair value at £22.75. Now they have reached that, and of course it is based on a discounted cash flow model on future cash flow, so again, take it with a grain of salt. We can go down here and see that analysts aren't, the target price is actually lower. They're expecting it to go a wee bit lower in the future. Okay, there we go. Future growth, damn, they did not score well out of this. It's 0 out of 6. Okay. So at minus 16%, what's going on here? Well, as I said, last year in December 2021, that was one of their best years ever. Well, actually, this year was the best when it comes to just general earnings, as commodity prices have went through the roof. They are forecasted to decline, though, in the coming years. Now, why this isn't necessarily a bad thing is because they are still probably projected to pay out between 7 and 8% dividend yield. Now, that isn't guaranteed either, but it is, even at these projections, it'll still be a tasty dividend yield for quite a few investors and portfolios. If we include free cash flow, again, you can't get better cash flow machines other than the likes of maybe the oil and tobacco industries when it comes to mining. $26 billion in free cash flow. Nice. Okay, out of the doom and gloom, we can see that past performance, 2015-2016 were not great years for BHP by any stretch. However, from the end of 2016, they started improving both their profit margin, earnings and revenue, and haven't really stopped since, even growing over the pandemic. A lot of high quality earnings. Right, down to financial health. Again, mining companies tend to be extremely financially healthy. They score 5 out of 6. Their short-term liabilities are well covered, 28 billion to 16, and long-term 66 to 29. You can see here their debt equity ratio sits at 32%, 15 billion in debt to 48 billion in equity. If we throw in cash and equivalents, they have about 17 on hand. Not bad. They have more cash than they have total debt, and their debt's also well covered by operating cash flow at a massive 205%, and their interest payments at 188 times. That's a good amount of coverage, definitely. Now, dividend, 5 out of 6. It's notable, it's high, it's not stable. You ain't getting a stable dividend with mining firms. They're growing, and they're covered by both earnings and cash flow. Industry average 7.7, so obviously BHP and Rio both blow it out of the water at nearly 10% or more. Now it is forecast to drop to 5.8 in the next 3 years. Now, a good thing is that they haven't not paid a dividend in at least the last decade, 10 years, that's pretty good. And they've been as low as 1.6% in 2016, and the highest they've been is about 12%. So again, reliability when it comes to dividend payments for sure. Also a little volatility. So I can imagine certain people will be put off by that. Some people might be totally up for it. Let me know what you think in the comments section below for mining firms. Is it part of your portfolio? Let us know. Down to management, we can see the average tenure is 2.1 years. And whilst Mike has only been in the job for 2.9 years 3 years essentially as CEO, he has been serving the company and being involved in BHP for a number of years, back as far as 2015, 2016, he was in BHP, I think, all the way. He joined in 2003, and he's been there ever since. So he's been there almost, nearly 20 years? That's certainly very impressive, to say the least. So it's good that someone has kind of grown through the business to CEO. That gives me a lot of confidence for sure. We can also go down and see the leadership team averages 2.1 years, which is just slightly above the 2-year limit to be considered experienced as far as the metrics in Simply Wall Street go. And then the board members, 2.7, but again, that's probably not taking into account the like of Mike being there for almost 20 years. And a lot of these people could have been moved in and out of the board. So again, something to always bear in mind. Who's been buying and selling? Whoa, that is a lot of buying and selling. Did I open that at one stage? Show less. Whoa, we lost a lot there. Let's see. And nothing too major in the last while. Let's go down and see. General public owned 49%. Institutions second at 46%. And surprisingly, there is a government in at 4.3%. We'll see who that is later on. Well, by later on, you're going to find out now. It's South Africa at 4.26%. That's a fair wee chunk of change put into BHP. But we have BlackRock, State Street, and Vanguard at the top 3. Did you expect anyone else? I'd be very surprised if you watched this channel for a while you expected anyone else. Currently, they employ 45,000 employees. Right. Let's jump over to Dividend Max. If you had 100 shares in BHP, which would be about £2,500, you'd have got a payment of £144. Now, remember, that was their highest payment that they have ever paid out, according to all the declared amounts as far back as 2006. They have never paid out as much as nearly 200 cents per share. Of course, if you only owned one single share, you got a payment of £1.44, which, depending on when you bought it, £25, you get £1.44. It's not too bad. They do pay typically 2 dividends per year, and you will have to wait. Their next date will more than likely be, they seem to always declare in September for March. Have we had any? No, the 20th is their next earnings call, so we'll probably have to wait for that. These are all 2021. How long has this not been updated? Am I on the wrong thing? BHP. Come on, Dividend Max. You never fail me in this. Okay. Goes to show. Sometimes you have to have a closer wee look. There we go. That makes more sense. Yep. Wow. I completely lied to you. 200 cents was not their highest. It was, in fact, 400 cents in September 2021. Okay. I have just been proven very wrong in that one. I hope anyone that was ready to run to the comments section, I've seen the error in my ways. Do not worry. Right. Over onto Alpha Spread to have a look at their intrinsic value. Currently sits at 35% overvalued, so it's in a bit of agreement with the discounted cash flow models. Obviously, with commodity prices sort of forecasted to go downhill, obviously their share price would be considered that as well. And because a lot of this is based on future cash flows, commodity prices dropping, would lead to an overall lower price for BHP for sure. Now, my one little qualm for any mining company is their dividend volatility. A lot of people say that because they maybe cost, average buying into shares throughout the years, it could lead to, a good nest egg. But again, well, I say that I am invested in Rio Tinto. It'll be good to compare the two for sure and see how they stack against each other, won't it? Anyway, I'll catch you on the next episode. Thank you.